Hello and welcome to Chartbusters. I'm Nigel. With me is Vinny. And as we speak, well, the markets are under pressure. But at least on the Nifty, we've seen a bit of recovery from the low point of the day. Tentatively, till noon approximately, you see some kind of margin calls getting triggered, some kind of selling pressure as well. And then, in fact, you'll see some kind of absorption. So let's see how we go with that. But first up, let's pull in a couple of managements. HEG, that saw a revenue decline in the past quarter. The only, saving grace was that the gross margin saw some kind of stability. What's the way ahead? Mr. Manish Gulati, the Executive Director of HEG, joins us on the show. Hi, Manish. Good day and thanks a lot for joining in. Well, tell us a couple of aspects. First, on pricing. There appears there is still pricing pressure. Will realizations improve from year on? And also, by the end of this year, what kind of a volume number can you report? I think earlier we were talking about roughly around 75,000 tons for the year. Is that on?
Absolutely. Good morning, Nigel. See, last year we worked at 80% capacity utilization, let's say around 82 or something. And this year, after expansion to 100,000, we still continue to run at 80%. And the revenue decline, the top line, which you see quarter on quarter, is nothing but a couple of BLs not obtained, although the plant dispatches still continue at the rate of 80%. So that will square up in the next quarter. As regards to pricing, I would say between Q2 and Q3, maybe an effect of 5%. But the main, the drop in top line is because of the lesser volumes and only because of shipping, some BLs not getting obtained. That's all.
This is encouraging then. You're saying realizations improved by around 5% in the past quarter on a sequential basis. But there was some kind of shipping related issue which hurt your volumes. Is that correct?
Yeah, no, I'll correct it. A pricing decline of 5% and a volume decline. Yeah.
All right. So it was a double blow then for you. All right. But pricing now in quarter 4 will improve in comparison to quarter 3?
See, our peer group have all announced a price rise.
Correct. So I asked you this.
15 to 20%, but it'll take a little time to take effect. It won't happen overnight. And as we book new orders, I hope that pricing will gradually start to improve, but it'll maybe take a quarter more or 2 quarters more, because obviously people have orders in their books which they're servicing now. So we are already in February, so we are in Q4. And it's about now that industry has started to announce price increases, and hopefully it'll take effect maybe another quarter or so.
So pricing will also be weak in quarter 4?
We're already in quarter 4. That's right.
Got it. And volumes, I just wanted to get that out of the way. You're functioning at around 80%. Expanded capacity is around, total capacity is around 1 lakh. So for the year, you'll end closer to 80,000 tons. Is that correct?
Yes, absolutely. And that's a big thing because this is the lowest level of the market, and still HEG continues to run consistently at 80% and is able to sell. That's the good thing.
Right, Mr. Gulati, good morning. This is Vinny joining in the conversation as well. What also we want to understand is in terms of the margins of the company. Currently, 16.6% is the EBITDA margin. Do you think that 20% is on the cards and we could see that recover further from here on? And how are you seeing this Q4 shaping up in terms of that as well?
We are in the middle of Q4. Please expect similar margins in this quarter. But going forward, because this is the lowest ebb of the market and this pricing is not sustainable. And we're just hoping, because see, the steel production is still stagnating in the developed world, especially in Europe. And we're just hoping that to start coming back and to its regular growth path and pricing to improve later in the year. That's our hope. And HEG is there to take as most competitive, I would say, with a 100,000 ton plant at one location. We are one of the most competitive guys.
Yeah. Okay, Mr. Gulati, also just in terms of one more thing I want to understand is in the needle coke prices, which is a key raw material. So how is that currently versus your past quarters? And how is that also shaping up and falling in line with G prices? Is that something that we could watch out for?
Spread between the electrode prices and needle coke prices is quite stable. The needle coke prices for the last 3 quarters have not changed, although they keep talking about an increase, etc. But the industry has to be ready to accept. So for them to raise prices first, we need to raise prices, because at this level, most of our peers are losing money, and we're just staying afloat.
Okay. Got that. So quarter four will be damp, but do you believe that in FY26, say in the first half, you get back to margins of around 20%? Needle coke pricing has not moved up. Your selling price will go up, and also you'll get the operating leverage that will play out. So margins head back to 20% in the first half of FY26.
I hope first half, but surely in the second half. So,
What about President Trump? You know, 2/3 of your exports, of your volumes are exported. What kind of impact do you expect? You know, we know that long-term story that there will be demand for graphite electrodes and you are well placed. But suddenly Mr. Trump is announcing tariffs here and there are, retaliatory tariffs as well. So could that hurt your business?
when we come to it, I mean, we are also hearing the same thing, what you hear. But as far as our electrodes is concerned, let's see what kind of tariffs he comes up with, or whether he comes up against India at all. So we'll see as the situation unfolds. But we are not overly concerned about it. I'm sure there'll be a way out, as you have seen with other countries also.
Okay, Mr. Gulati, just one last question from my side at least, is that in terms of cash on books, what is that currently for the company, especially post your expansion? And seems like, you're giving some loan to your associate company, which is Bilavar, in which HEG is holding 49% stake. So could you tell us more about that, also in terms of loan size, interest payments?
That is, first of all, the cash on the books is about 950 crores and about 450 crores is working capital. And about the loan to associate company of 100 crores, this is for their internal green energy projects. It's an arm's length. It's at 9%, as you have seen. So it's for to fund their some of the green projects which they are pursuing.
Your stock price is corrected to half. Instead of giving it to the associate company, you rather do a buyback and support the stock price. Don't you think? Your shareholders are saying, what's going on, Mr. Gulati? What do you think?
The stock prices will come back on their own. It's about the market. We know we are in the right business. And Nigel, you will see, let H2 come. I'm sure things will be much more positive. And this 100 crore is at 9%. So the HEG doesn't lose any money.
Okay, all right, Mr. Gulati, we have been in touch and I've known you as well as the company for close to around 10 years. We have seen various cycles from margins of 70% to margins of 17%. But as you're saying, that better days lie ahead. So we'll track you to those numbers. Thanks a lot for joining in. Well, time to slip into a short break. On the other side, we have the management of RHI Magnesita who will be joining in. They surprisingly delivered a rather good set of numbers. Stay with us. We'll get to that conversation. Welcome back. Well, don't you lose heart because there are a couple of stocks that are seeing a good recovery from the low point of the day. Kirloskar Oil, the stock was down 10%. It's recovered close to around 8%. BSE, the stock was in the red. It's moved into the green now, 5% off the low point of the day. Angel One is another one that's recovered. So there are select stocks that are seeing a good recovery. And from around 180 stocks that were advancing, now you have 320 stocks that are advancing. So giving you some heart, don't lose sight of the screen. Don't throw in the towel. There are few of these stocks that are seeing a good amount of recovery. That said, let's get to our next management. RHI Magnesita reported a good quarter, 1,000 crores of revenue in a single quarter. Well, that was the positive out there. But the street is asking, what's the way ahead and can they keep up this sort of performance? Well, we have with us Mr. Pramod Sagar, the chairman and managing director of the company. Hi, Mr. Sagar. Good morning and thanks a lot for joining in. After a while, you'll have to say it's a rather good quarter, 1,000 crores of revenues. Can you keep up this momentum? Your volumes are moving up nicely. You've introduced a couple of new products as well. But the question is, can you keep up this momentum from here on? And what is your updated market share?
Thank you, Nigel. Good morning. Actually, I'm really happy about this historical milestone of 1,000 plus in a quarter. This we did first time. As you know, our business is based on some regular business of steel and some seasonality business like cement and non-ferrous. So I'm very optimistic about regular business, but cement business, as I said, is seasonal. And from Jan to March is normally a lean period for their maintenance. So there is a concern. So this quarter, coming quarter, which we are running now, it may have an impact of this. But from steel part and regular business, we look for an upward in this. And this quarter, I hope it will be on similar lines, barring cement lean period. And our goal for capturing 40% market share is in place. In next 4 years, we are going to achieve 40% market share with some investment, some modernization in our plant, some expansion of value-added products from our other portfolio from our parent company.
What is it currently as of now? You want to go to 40%. As of now, what is your current market share? And tell us about pricing as well on ground. Volume growth is good, but are you able to increase prices?
As of now, our market share is about 30-31%, and we want to go to 40%. When it comes to your question about
Realizations.
pricing,
Yeah.
yeah, so we are having a headwind from aluminous raw materials. The prices have gone up in last 6 months up to 40% or so. And as of now, we have not able to, not only we, but industry, refracting industry is not able to pass on to the end users. So this has impacted everybody, including us. But we are trying to mitigate that risk with the better efficiency in our plants, reducing our scrap rate, improving our productivity, and also using some circular economy to maintain our pricing.
Sure, Mr. Sagar, good morning. This is Vinny joining in the conversation. What I want to know is also in terms of your exports, because exports have come down to 10% from earlier 14%, and you're aiming at somewhere 20 to 25% in the next 2-3 years. So I want to understand what is the export now and what are you targeting in FY26 in the near term?
Unfortunately, you know, the geographical situation globally is very volatile, and our aim was this, but because of the, you know, seasonal volatility in the business outside India, also Mr. Trump's favorite dialogue of tariffs now is impacting more on, you know, outside world, Europe and even Latin America. The steel production will be impacted because of this. And if China keep on producing more steel and divert it toward other countries like India and the Southeast Asia, then I think it will not be, in near future, we will not see any uptick on exports.
Okay, not expecting much of an uptick. Not expecting much of an uptick in terms of exports. So that main concern is you're saying is the Trump tariffs and all those coming into play for the company as well, right? Like approximate impact or anything that you've calculated on that front?
We have not calculated, we are still working on it, but it will have impact if, you know, we were looking at anti-dumping duty from government. Steel people were lobbying for that from last 2-3 months, but unfortunately nothing has come up. And I expect it will happen. And if anti-dumping duty will come into place as desired by steel industry, probably it will not have any adverse effect on us and at large India.
Mr. Sagar, in the past I've told you that you're growing less than the industry. Are you currently growing more than what the industry growth is? You know, because your volumes look quite strong, point number one. Point number two, what about profitability? Your margins, you had told us you want to go to 14-15% margins. Will margins continue to improve from here on? It's holding in the 12-12.5% on a consolidated basis.
No, our still market guidance said about 15%, and we are working toward that. And you should not be looking at quarter by quarter the, you know, profitability. It has some impact, some imports, some raw material headwinds, sometime forex impact. But on long term, we still maintain we will be able to deliver around 15% margins.
And you're outgrowing the industry, you're saying?
Yeah, outgrowing the industry as well.
And 15% margins, we expected at some time in FY26?
Yeah, probably second quarter of 26.
Okay, all right. Final question, sir. There is that large, you know, holder in RHI Magnesita, and I keep asking you this. You tell me you should check with them, the Dalmia Group. Could you tell us what is the update on that front? What about the promoter? You know, the stock price has come off from 800 rupees or to around 450, and now you're talking about performance as well improving. Will the promoter be interested in, infusing some more money into the Indian listed entity, or maybe buying a block if there is a large seller?
We are open about everything, but as you talk about the stock going down, it is for everyone. The market at large is going down. If you talk about our peers, competition, everybody's stock has gone down to the lowest level in last 1 year or so. So we are not only impacted, everybody is impacted, and it has external factors, not because of the performance.
Okay, but is the promoter interested in putting in some money in the listed entity?
I hope so. They are open to everything.
Okay, all right. Mr. Sagar, thanks a lot for joining in. You're sounding optimistic about the future prospects. As you're saying, your stock has got hurt in line with the market as well. So we'll take note of that, but guiding for better times in FY26. By the way, from the time we have started the show, it appears there has been a good recovery. The Nifty is now down only around 120 points. We were down 250 points. And the breadth of the market as well has improved drastically as we speak. So big improvement. We have close on 500 stocks that are advancing as we speak. Not out of the woods, but good to see some kind of recovery. Slip into that short break, come back, continue to focus on markets.
Welcome back. You're watching Chartbusters on CNBC-TV18. A quick look at what the market is doing. We're seeing a bit of a recovery that's come in from the day's lowest point. Nifty has recovered almost 200 points. Right now, just trading with cuts of almost 0.6%. Let's pull up Nifty PSU Bank. That was trading in the green for a short while. So that has also made a comeback. And we're seeing most of the sectors trying to make a comeback. It did trade in the green as of now. It's come back to the red side, but keep an eye out on that. But yes, that's how the market is looking like. At least we've seen a recovery coming in, Nigel, from when we started the show. So that's surely a good day.
Well, that's right. Vinny, the good luck charm for the market seems today at around 10:30 a.m. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You don't go anywhere. The team of Trading Arm comes up next.